Quint, this is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Hello and welcome. This is All You Need to Know. I am Agam Vakil. Let's start off with the global markets. And at this point in time, what we're seeing is a positive trend when it comes to the American markets, or for that matter, Europe, which has also been trending higher. And consequently, Asian markets have also opened in the green. What does it mean for the SGX Nifty? Well, an up move at this point in time, further away and above the mark of 11,000. How is it that our own markets have panned out yesterday? We saw gains coming in all the benchmark indices, specifically from the broader markets such as the Nifty and the small cap indices, outperforming the major indices. And it is the same when it comes to the Nifty banking index. In fact, the Nifty PSU banking index actually stands out, considering it moved up by around nearly 4%, and the strength coming through wasn't only on the back of SBI, but also several other banks from the public sector space. And of course, metal, pharma and media indices, which were also so volatile, which have been so volatile over the previous few days, have also advanced yesterday. And moving in, let's take a look at month-to-date performance. Of course, energy stands out because of the gains in OMCs, and IT because largely led by TCS and Infosys. And on the losing end, we do have some weakness in metal, media and realty indices on a month-to-date basis. However, when it comes to your EDR picture, well, it was green all through. Vedanta, Tata Motors, ICICI Bank, Wipro, all advancing in trade, and it is the same for Infosys. HDFC Bank and Dr. Reddy's also ending the day with marginally in the green. FIIs, of course, bought or rather sold 672 crores worth of equity on a net basis. DIIs, on the other hand, bought around 840 crores on a net basis. That brings up a figure of DIIs which is much higher in terms of buy as against FIIs, which is a set of nearly 1800 crores at this point in time as of now for the month of July. In terms of contributors, what we're seeing is gains in Reliance Industries and ICICI Bank along with SPI. On the losing end, however, we do see HUL and ITC along with Kotak Mahindra Bank bearing down on the indices. How is it that things are panning out in futures, where we did see longs accumulate in the Nifty futures with an OI increase of around 2.5%, and it is the same for the Nifty banking futures as well, where about 3.5% increase OI was seen. But let's move in and take a look at how we've seen changes in OI when it comes to different options. And there was the 11,000 call and put, which was the most active yesterday. The 11,000 put saw writing unwinding in the 11,000 call. We've seen a change in maximum open interest. So if we can bring up the distribution, the maximum open interest in puts has moved from 10,600 to 10,800. And while in calls it still remains with the 11,000 call, there is a lot of traction now building in around the 11,100, 11,200 calls. So watch out for these as we move into trade. And that said, let's talk about the put call ratio, which is edged up higher at around 1.68 for the Nifty and up as much as 1.15 for the Nifty Bank. And when it comes to some other stocks that we will be watching out for, we're about a little over a week from expiry, and Jet Airways, Adani Enterprises and Adani Powers in F&O ban. In fact, the Adani group companies entering the F&O ban yesterday. Among others, we're watching out for Mindtree. Mindtree announces its earnings later on post-market hours. We've seen accumulation of longs there. And the other one that we're talking about is PC Jeweler, continues its grind lower. Well, it did see a hit of around nearly 7%, 8% added in open interest. And finally, let's look at DCB Bank. Some amount of short covering after the substantial weakness that we saw in this counter a day before. So these are just some of the stocks that we'll be watching out for, other than the fact that we've seen good gains coming in the benchmark indices. But now let's go across to Bloomberg's Tom McKenzie for the top international headlines.
President Trump has reversed his denial of Russian election meddling after a widespread backlash, including from senior members of his own party. Trump now claims he misspoke one word during his news conference with President Putin in Helsinki. The attempted clarification came more than 24 hours after those comments, from which he had not backed away in several subsequent media interviews.
I realize that there is a need for some clarification. It should have been obvious. I thought it would be obvious, but I would like to clarify just in case it wasn't. In a key sentence in my remarks, I said the word would instead of wouldn't. The sentence should have been, I don't see any reason why I wouldn't, or why it wouldn't be Russia.
The Democratic National Committee says it can't find President Trump's son-in-law to let him know he's being sued for allegedly colluding with Russia. Officials tried to serve a summons at Jared Kushner's Manhattan home 3 times, were turned away from his Washington address and told no one would sign for a certified package. The DNC now wants a judge to rule it can send the summons through the mail. China remains the largest foreign holder of US debt despite the rising trade tensions. Beijing's Treasury stockpile held steady at $1.18 trillion in May after dropping the previous month. The second largest foreign creditor, Japan, increased its holdings by almost $18 billion to $1.05 trillion. Reports from London say EU nations are being told to prepare for a no-deal Brexit. The Daily Telegraph story appears on the day the new UK Brexit Secretary, Dominic Raab, visits Brussels for the first time in his new role. Senior EU officials meet later Wednesday. They'll discuss a wide-ranging internal document that urges member nations to step up contingency plans for the UK to crash out of the bloc. Goldman Sachs has confirmed that David Solomon will succeed Lloyd Blankfein as CEO. October 1st will usher in the new era, only the second handover of power in Goldman's 2 decades as a public company. At 56, Solomon will be the bank's oldest new leader in almost half a century. Blankfein has been at Goldman for more than 30 years. He's expected to pocket almost $85 million when he finally walks away.
Stepping down as CEO at the end of September, and as chairman, and I will retire from the firm at the end of the year.
Global News 24 hours a day on air and at TikTok, on Twitter. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Tom McKenzie. This is Bloomberg.
On to Indian equity markets. Hi, this is Nikki, and stock of the day is Jindal Stainless on back of good set of numbers reported by the company. We're looking at a 56% uptick in the top line growth of the company to a number of around 3,147 odd crore. If you look at the profitability of the company, it's more than doubled to 91 crore as compared to 41.5 crore on year-on-year basis. However, you're looking some kind of traction, 50% jump at EBITDA at a number of around 375 crore as compared to 250 crore. However, the margins somehow have remained flattish around that 12% kind of level, mainly on account of faster growth that we've seen in sales. What has led to a good set of numbers, higher revenue and stable cost structure has led to a good set of numbers on operational front. Even as the raw material cost has remained somewhat flattish for this company, we're looking at a downtick for power and fuel cost as a percent to your net sales. That has come down to 5.6% as compared to 7% earlier. Also, we're seeing some kind of decline coming in from other expenses, which as a percent to your net sales has come down to 10.7% as compared to more than 12% that we've seen in the corresponding quarter. This combined with the lower depreciation along with the lower exceptional loss, which has aided the bottom line performance of the company. The company has reported an exceptional loss of around 15 crore in this quarter as compared to 18 crore figure that we saw in the corresponding quarter of the previous year. However, sequentially, we're looking at a flattish growth coming in on the revenue as well as the EBITDA structure of the company, mainly on account of the traditionally lean season along with the higher raw material cost, which has impacted the sequential performance of the company. However, overall, if you look at the the robust performance. The expansion in stainless steel flat products has mainly led to the growth for the company, and the volume growth on year-on-year basis for this company has risen as much as 51%. Importantly, the company, which registered a good turnaround in FY18, now has become eligible to exit from CDR scheme, and it's on account of superior performance that it has shown in the past 2 years. On back of that, consortiums of lenders have also approved and recommended the CDR exit. However, the matter is yet to be taken up for approval in CDR forum.
Let's shift focus to currency and commodity space. Talking about Indian rupee first, it was tracking gains in the Asian currencies market yesterday, and it ended at a 3-week high against the US dollar yesterday. The home unit ended 0.2% higher at 68.46 a dollar. Now, a sharp fall in the crude oil prices along with upbeat domestic equities largely helped the rupee to recover the momentum. Well, speaking of the bond market, sovereign bonds advanced yesterday as a 10-year benchmark yield dropped nearly 6 basis points to end at 7.4%, which is its lowest level since May 2018. In terms of flows into debt market, global funds increased their rupee debt holding after withdrawing their holdings for 3 consecutive sessions. Now, that's according to NSDL data. On the global front, dollar rose against most of its G10 peers as US Fed chair affirmed gradual rate hikes going forward by the central bank. US Fed Chair Powell gave a positive outlook for the economy as the job market strengthened and inflation has moved well above Fed's target of nearly 2%. While the dollar moved higher against the pound as well as euro. Euro slipped in almost 0.4% yesterday, while pound did drop nearly 1% against the greenback on the back of softer than expected UK data. And lastly, speaking of dollar rupee, now it is trading at 68.40 levels against the dollar in the non-deliverable forward markets, which indicates a positive opening for Indian rupee in today's trade. Having said that, let's shift focus to commodity space. Good morning, Jayesh. What cues are you picking up today?
Morning, Saloni. No major moves coming in as far as the oil markets are concerned. Overnight, WTI did manage to close flat after a 4% decline that we saw in the previous session. However, if you look at the early Asian hours, oil markets are showing some bit of weakness, with both WTI and Brent declining more than 0.5% each. Now, this is largely on the back of a surprise inventory buildup that we are expecting. So API is in fact likely to report an inventory buildup of more than 600,000 barrels for last week. Remember that as per a Bloomberg survey yesterday, we had indicated an inventory drop of about 4 million barrels. So we'll have to wait and watch how the actual data in fact comes out. But shifting focus to the base metal space, individual base metals closed mixed. However, the index in fact continued its decline for the 3rd straight day. The LME aluminium inventory in fact jumped about 1.7%, which is the most in about 3 months. And as far as speculators are concerned, they did in fact boost their LME zinc bets to the most in about 3 weeks. The LME speculators have in fact also boosted their aluminium bets, and on the other hand they have decreased their bets on copper as well, on the back of which copper in fact declined about 3 days in a row. What also did not go down well with the base metal space was the central bank's trajectory, or the commentary which came about yesterday from Jerome Powell, in which they did indicate that the central bank will in fact continue on its gradual increase in interest rates. Not only that, it had an impact on gold prices as well, as we saw gold decline to 2018's yet another low, and in fact slumped about 1% in the overnight session.
Well, amongst the stocks that we're tracking in trade today includes a couple of companies which reported numbers after market hours. I'm going to start off with Z Entertainment, which posted an inline set of numbers. So revenues grew by 15%, net profit saw a growth of about 31%. On the other hand, as far as the operational performance is concerned, EBITDA growth came in at 17%, and you saw a 50 basis points expansion in the margins. Overall, while ad revenues were above estimates, we did see subscription revenues come slightly below estimates. But that apart, we are also tracking Rallis India. 30% top line growth, that's something that we haven't seen in many quarters now. Net profit growth of 22%, and as far as the operational performance is concerned, EBITDA grew by 22%. However, net EBITDA margins saw a slight downtick. Nevertheless, the numbers seem to be slightly above estimates. Third on the list is Syntex Industries. Again, a strong set of numbers coming here. Revenue growth of 34%, net profit growth, however, restricted at 11%, but very strong operational performance. If you look at the EBITDA growth, that came in at 43%, and you also saw margins expand by about 70 basis points. Next on the list is Tata Sponge Iron. Again, very strong set of numbers, revenue growth of 49%, net profit growth, tracking revenue growth. And finally, even as far as the operational performance is concerned, you saw EBITDA margins bump up of about 100 basis points. That apart, you also have HDFC Bank, which has said that they have raised 8,500 crores from the parent company HDFC via a preferential allotment, the price of 2174.1 per share. This, of course, is a part of the HDFC's plans of investing or maintaining its shareholding in HDFC Bank that was announced way back in December 2017. Next on the list is PNC Infra, where you could see some positive reaction on the back of an order win worth about 1,150 crores. And finally, last on the list is Rolta India, which has said that the company will implement revised restructuring of bonds. So let's see how that one reacts in trade today.
TCNS Clothing's IPO opens today. Now, the company is looking to raise close to 1,125 crore rupees at a price band of 714 and 716. And at the upper end of the price band, that is 716, the company will be valued at close to 4,400 crore rupees. Now, the IPO is a complete offer for sale where the investor, current promoters and the current MD will be selling its shares in this offer for sale. Now, the investor, that is Wagner, will gain nearly 2 times his investment in the company, while the promoters, that is Arvinder Pasricha, Onkar Pasricha and Saranpir Pasricha, will gain in the range of 11 to 53 times their investment in the company. And the current MD, that is Anand Daga, will gain nearly 11 times its investment in the company through this offer for sale. Now, if you see, TCNS Clothing is mainly into women's apparel. The company has 3 brands, that is W, Aurelia and Wishful. Now, the W brand contributes nearly 58% to the top line of the company, and the revenue from the W brand grew at a compounded annual growth rate of 23% over FY16 to FY17. Now, the Aurelia brand contributes nearly 34% to the top line of the company, and the revenue from this brand grew at a CAGR of around 48%, while the Wishful brand contributes nearly 9% to the total revenue of the company for the financial year 2018, and the revenue from this brand grew at a compounded annual growth rate of 40% over FY16 to FY18. On the distribution side, if you see, the company sells its product through exclusive brand outlets, large format stores, multi-brand outlets and through online websites. Now, if you see, the company has nearly 465 exclusive brand outlets, 1,469 large format stores and 1,522 multi-brand outlets in 31 states and union territories. It also has 6 outlets in foreign countries like Nepal, Mauritius and Sri Lanka. And on the revenue side, if you see, it gets 50% of its revenue from exclusive brand outlets, while the remaining 50% comes from large format stores, multi-brand outlets and through online sales. Now, Keval Kiran Clothing and Future Lifestyle are some of the peers of the company, but TCNS Clothing is only into women apparels, unlike these 2 players. Now, if you see the growth rate of the company over FY14 to FY18, the growth rate of the company was better than that of Keval Kiran and Future Lifestyle, and that was because in FY18 the company saw comparatively lower employee cost and tax expenses and higher other income. Now, over FY14 to FY18, if you see, the company's revenue, net profit and EBITDA grew at a compounded annual growth rate of 49%, 83% and 63%. On the balance sheet side, if you see, the company is a debt-free company with a total cash of close to 52 crore rupees for the financial year 2018, and the book value per share for FY18 was close to 70 rupees for the company. On the return ratio side, if you see, the return ratios of the company are better than that of Keval Kiran and Future Lifestyle, and that is because of the asset-light business model of the company. And compared to financial year 2017, if you see, all the 3 return ratios for TCNS have expanded. For financial year 2018, the return on equity was 23%, return on capital employed was 38%, while return on asset was close to 20%. On the valuation side, the valuations are a bit expensive for TCNS when compared to Keval Kiran and Future Lifestyle on different parameters. Now, price to earnings earnings for FY18 is close to 45 times, market cap to sales is 5.2 times, EV to EBITDA is 28 times, while price to book is 10.2 times. Lastly, on the brokerage side, it's a mixed view, with one brokerage having a subscribe rating, one having a subscribe for long-term rating, one brokerage having a avoid rating, while angel broking having a neutral rating. Now, the subscribe rating is on the back of steady financials, no debt, and the healthy return ratios, while the subscribe for long-term rating is on the back of the growth prospects but the demanding valuations at this point of time. The avoid rating is because of the expensive valuations and the competitive market, which makes choice broking believe that the current margins would not be sustainable going forward, while angel broking has a neutral rating on the back of the singular focus of the company on ethnic women apparel and because of the expensive valuations that the company has at this point of time.
While on to earnings season, we are expecting UltraTech Cement to be expecting muted set of numbers today. We're looking at a 30% uptick in terms of the revenue figure to a number of around 8,655 odd crore. EBITDA is, however, expected to remain flattish at around 1,500 odd crore level, and we are looking at a downtake or a contraction coming in the margins at 17.9% as compared to 23.5% in the corresponding quarter of the previous year. We are also looking at a downtake on the profitability front of the company, a 35% decline to a number of around 581 crore as compared to 890 crore. And if you look at the other parameters necessary to track a cement company's volume, well, that's a healthy number, 35% uptick to a number of around 17.5 MT as compared to 12.9 MT. That's account of sharp rise due to JP asset acquisitions. And also, if you look at the EBITDA per ton, that, however, is expected to reduce by as much as 27% to a number of 888 per ton as compared to 1,200 per ton in the corresponding quarter, mainly on account of higher fuel and freight costs, which is expected to weigh down on the unitary cost of the company. Realization per ton is also expected to be muted for the company at 4,946 per ton on account of the weak pricing power. Overall, we are expecting healthy volumes. However, margins are expected to contract for the company, mainly on account of a weak realization and higher input pressure coming in from the company. This, besides the higher depreciation and finance cost, is expected to weigh down on the bottom line performance of the company.
Well, let's get you a top check on the delivery buying and selling and the stocks that you need to keep on your radar. The first stock on the list is IDBI Bank. Now, that was up about 2.5% in trade and saw delivery buying of nearly 300 crores. The delivery volume surged more than 3 times as compared to its 5-day average. So did the total volume surge at 3 times as compared to its 5-day average. Second stock to watch out for, that will be Federal Bank. Now, after posting a good set of numbers, it managed to surge nearly 20% and saw delivery buying in excess of 125 crores. The delivery volume managed to just about double for itself as compared to its 5-day average, while the total volume surged more than 3 times as compared to its 5-day average. Last and final stock to watch, that will be HPCL. Now, that was up about 6.5% in trade and saw delivery buying of nearly 100 crores. The delivery volume surged about 82%, while the total volume surged just about 65% as compared to its 5-day average.
All right, we've already discussed several stories over the course of the last half hour. If you want to look at any of those in more detail, you can log on to the website bloombergquint.com. Here are just a couple more stories that you'll find if you do log on. Drones for civilian purposes are likely to start flying in India from October, as the Civil Aviation Ministry is likely to put in the regulatory framework for it soon. The use of drones for civilian purposes is currently restricted by the DGCA. And Americans may soon be able to get cholesterol-lowering medications and other widely used prescription drugs without seeing a doctor. This is a first step in what could amount to sweeping changes to how patients access treatments for chronic conditions. That's a significant update for several Indian pharma companies. That's all you need to know going into trade today. Up next is Indian Open, so do stay tuned. This is Bloomberg Quint.
First is Donald.